married filing jointly and married filing separately. What does it actually mean when you switch to married filing separately? My name is Tony Cameron with TLDR Accounting, and we provide tax and accounting services to therapists, small business owners, and individuals. So to even begin this conversation, there are a couple of things we need to cover. Married filing separately is when you're married, but you're each going to file your own separate tax return. Married filing separately, right? Married filing jointly is where you only file one tax return with your spouse. Now, before we even look at that, there's one part of it that is super important, and that is, do you live in a community property state? Washington is a community property state. If you live in a community property state, there are different rules to married filing separately, right? So I'm going to first cover if you're not in a community property state, and then I'm going to rotate back to if you do, say, live in Washington or any of the other community property states. So if you aren't living in a community property state, what happens is you each file your own tax return. You do have to mention that you are married, provide your spouse's name and social security number. But what happens is any of your income will just be on your return, and any of your deductions will be on your return. Sounds pretty simple, right? The only time we see this where it will even save you money is if you have someone who's in a really large income bracket and someone who's not in a large income bracket and they're applying for student loans or reasons for that, right? Most of the time, we do not recommend that you file married filing separately. Just because you lose a lot for doing married filing separately. There are certain tax deductions that you do not get, and they're usually ones that, do provide large benefits. You don't get the earned income credit if you do married filing separately. It changes your social security benefits and how that tax is being calculated. It can also change what you can contribute to and how much you can contribute to certain types of accounts, right? So to look at the situation, you really need to look at what's currently on your tax return. Are there any of these benefits that you're going to lose because you're now doing married filing separately? The one area where I do see this coming into play a lot is if you are an income-based repayment plan for your student loans, and you file married filing separately to keep your income lower so that you can still pay a smaller payment on your student loans. Usually it's the only case I see. It's either that or their spouse has vanished. So they have no contact with their spouse. They are in the process of getting a divorce, but the divorce isn't finalized and they can't get a hold of their spouse. The last is fraud. Say you're married to someone and you don't know what they're doing, or you don't agree with some of their decisions. To protect yourself, married filing separately could be beneficial. Okay. Now, if you were in a community property state, when you're married, any income you earn is owned jointly by the two of you. So that means when you do a married filing separate tax return, you actually have to split each other's income 50-50. And your incomes are basically going to be the same on the returns. There's very few circumstances where that would change, right? So as you can see, it wouldn't then someone having $20,000 and someone having $100K on the return. It would actually be 50-50, which isn't as helpful, right? If you have an income-based repayment plan, that 20K is a lot better than 50K. But like I said, it depends on your circumstances. In general, like I said, we tend to not recommend it, but step one is going to see if you are community property state, and then move forward from there and see what deductions you would lose by married filing separately. If you found this helpful, please subscribe below.